Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and this week I'm going solo to talk about some stocks that you all have questions about. These are popular names. I plucked them off of the YouTube comments because I've been telling you, if you post stocks that you're interested in me covering, I will aim to please. And so that's what this episode's all about. The stocks that you all are wondering the most about, what's happening with them? What does the earnings outlook look like? We are in the middle of earnings season, but I don't believe any of these stocks have reported yet. So we still have a little bit of time to take a look at that. What is going on here in 2025 with these popular names? And they are mostly popular names, stocks that you've all heard about. Now, someone did ask me about a few other stocks that I just didn't want to cover on this episode. And one of those is Nestle. We've talked about Nestle in the past. You have asked about it in the past, but maybe you missed that episode. But it's a couple months ago. I covered stocks that you all were wondering about as well. And Nestle was one of those that I did cover. So look back in the Market Edge podcast archives, and you will find it. You can see the tickers in the podcast listing there usually and in the timeline. So take a look, but it wasn't that long ago. I want to say maybe in October or November of 2024, I covered Nestle. So check that out. But it's not on this list of 5 stocks that I plucked out. But we are going to start with one that was, and it is Red Cat Holdings, ticker R as in Robert, C as in cat, A, T as in Tom. And I know some of you who are watching on YouTube are like, why is she always mentioning the stock ticker and giving all the letters out? Because this is also an audio podcast, and many people, thousands in fact, are actually just listening to it. So I want to make sure they understand what the stock ticker is. So that's why I repeat it often while I'm giving the stock and at the end of the episode. So Red Cat is RCAT. And what do they do? I had to look it up because I haven't been following this stock, but it is drone technology for the military, government, commercial operations. But they're big with the military right now. And they've been in the news recently when I took a closer look because a short seller, Kerrisdale, is shorting it. They are apparently alleging that it's exaggerated its deal with the military that it previously announced. So what do the Red Cat numbers actually look like? I'm going to go over to Zacks.com and take a look because I am curious to see what actually is going on with this company. It is a small cap with about a $660 million market cap. The stock did soar in the last year. It's up 1,042%. So this is why you're asking me about it, right? Because that's tremendous. But year to date, it's down 39%. So it is one of these very, volatile type stocks. It is trading under $10. I brought up the chart here, the quote page, and you can see it's at 855 right now when I'm recording this on January 21st, 2025. It has a Zacks rank of 4, but this is earnings season and a lot of stocks fall to the number 4, which is a sell. Just before earnings because their old earnings estimates drop off of the computer algorithm and then they see the rank drop as well. So I'm not too concerned about the Zacks rank right now with any stock because of this little peculiarity in how the Zacks rank works. It does have an F VGM for the style scores, so it's not a value, but it has a D for growth and a B for momentum. So it definitely has some momentum, right? Okay, and I'm scrolling down. I'm looking at the price consensus and surprise chart. So we do have some earnings estimates in on it. The stock did take off last year and mostly towards the end of the year, really soaring there. there. And that's why, everybody's paying attention. Now, looking over at the 52-week high and 52-week low, the low is at 56 cents. And then I said it's trading at 8.55 thereabouts, and the high 15.27. So very volatile indeed. Now, what is going on with the earnings? Let's look at the detailed earnings estimates, because you can see them kind of on the decline there a little bit in that chart. But are there any estimates? There are. We have one estimate in for this fiscal year and next fiscal year. Expected to lose 50 cents this year, but only 2 cents next fiscal year. That is a decline this year of 38.9% on the earnings, but a gain of 96% for next year. One estimate is down in the last 60 days, but that's about all we've got. So we are waiting on earnings, which this says isn't going to be until March 17th, but that's just the estimated date. It does not have an asterisk next to it, which on Zacks.com would indicate that this date has been confirmed. So we're going to wait on earnings with this one. And meanwhile, you got short sellers announcing they're shorting it, and other good stuff going on. So this is just a tradable stock, as I think most of you know who are asking me about it. And you're going to have to wait for the next earnings report and to see what's really going on with the growth in the business here. And this is in the drone side. We don't even have an estimated revenue for next year. We only have one date for this year of 17.8 million. So I'd like to see what's happening with revenue for next year. So I'd like to see a few more analysts looking at this company, and maybe they will be, given what's been going on. So Red Cat, it's on hold for me as we're waiting for more info to come out. But in these kind of, small cap companies trying to grow their business, that's why a lot of them are not profitable on the earnings side. And so you better do your research and know really what's going on with the growth story with these types of companies. But that's Red Cat, RCAT. Okay, another one you were asking me about is on the gold mining side, Barrick Gold. Someone wanted to know if I had an update from my gold podcast from several months ago when I had the top gold mining stocks to buy, I think it was, or the top ways to buy gold right now, or something along those lines. You can buy gold in the ETF, the actual physical gold. You can buy those in the ETFs. And there's like a gold mini now too, where you can get it a little bit cheaper if, you don't want to pay the high price of the ETF now. So those are an option, but I have taken a look at the miners, and Barrick Gold is one of those big cap miners, because when the price of gold is rising, usually the miners see a big benefit from that as well. But it's been a bit rocky over the last couple of months with the miners. And let's take a look at Barrick Gold. Ticker is GOLD. That's an easy one to remember. And it's a Zacks number 3 right now. It does have an A for value, C for growth, F for momentum. Like I said, the stocks have been struggling recently, but a B score for the VGM. Now, taking a look further down at the price consensus and surprise chart, it did miss last quarter. Some of the miners were really disappointing in their earnings report for last quarter, because the problem with the miners is, and this is true of the oil producers as well, and on the fertilizer side with the fertilizer producers, is that they have to execute. They have to produce. They have to get the gold and in silver, copper, whatever they're mining out of the ground. And there's a lot of issues with that, as we've seen even in the news recently. There is labor costs. There are strikes. There are weather events. There's a lot that goes on. There's also inflation on some issues, things that might be on just even the mining equipment. And with the labor costs, a lot goes into actually the gold mining business. So Barrick Gold, One of the big ones, as you can see, here's the dividend over here. It's now yielding 2.5%. They did have an investor day in November, so I took a look at that. They reduced their debt by $3.7 billion in 2024, and they've returned $5.4 billion to the shareholders. So they are very committed to the free cash flows going to the shareholders. They have this dividend. I think they're doing share buybacks too. And so, you get both with a stock like this. Now, it is, hasn't been doing much. It's off those recent highs from 2024 as the price of gold kind of, had a sell-off at the end of 2024. It's trying to rebound a bit here to start 2025, though, and that should help the mining stocks because the gold mining stocks will move in tandem with what gold is doing for the most part, except if they have some kind of execution error and it impacts earnings. So it kind of moves in tandem there. Year to date, these shares are up 3.8%, but over the last year, they're up only 2.8. So they did rally last year when gold was hitting new highs virtually every session, but they gave up a lot of that rally and are now back down again. It's got the good value score. So does it have good value here? Well, the forward PE is now down under 10 at 9.8, and it has a PEG ratio of 0.3. So that's both value areas. It won't report earnings until mid-February, so we're waiting on the earnings with this one. But taking a look at what the estimates are looking like, so earnings growth of 48% here in 2024, that's pretty impressive. That's why I was big on the mining stocks for the year. As gold was rising, silver prices too, their earnings were rising. Next year, 2025, which we're already in, but we haven't found out yet if this is going to happen, is up another 30%. So we have $1.63 expected for 2025, $1.25 to close out 2024. But look at the earnings revisions. We have nobody up in the last 7 days. One is down for this year in the last 7 days, but 4 are also down for 2025. So analysts not quite as bullish anymore. And you can see 2025 started off 90 days ago at $1.90 and now is down to $1.63. So coming back down to earth a bit as a lot of these factors on execution are going to play in, as well as just the price of the underlying metals. So I don't hate the gold trade here, but maybe owning the actual physical gold might be a better method to get some of the upside, which many analysts on commodities think will happen here in 2025 with gold and silver. But will they keep this rally going? I don't know. It's still early in the year, but it looks like gold wants to turn it around a bit here to start 2025. So that's Barrick Gold, GOLD. I'll be watching these earnings reports on Barrick and the other gold miners in the next couple of weeks. Okay, the next stock is on the tech side, of course. You'd be interested in that. And it's Arista Networks. I've not covered this one, so it's good to take a deeper look at it. It is ticker ANET, Arista Networks, and they are, and I'm just getting this from their website, data-driven client-to-cloud networking for large AI, data centers, campus, and routing environments. They have about 8,000 cloud customers. On December 4th, they also did a 4-for-1 stock splits that tells you how hot it's been. 1 year, the shares are up 82.5%. Year to date, up 7.4%. And we're still fairly early in the year here. So that's pretty impressive. Anything with the AI trade, data centers, this area remains hot here in 2025 like it was in 2024. Okay, so it's a number 2. It's got a good Zacks rank ahead of earnings. So that's impressive. That's telling me that the analysts are most likely raising their earnings estimates. It's an F for value. No shock there. A for growth though, and a B for momentum. So it's got a B overall VGM style score. Now, just scrolling down, looking at the price and consensus, it's got a perfect earnings surprise track record. I love that. 5 years, all green arrows, very difficult to do for any company because we had the pandemic almost 5 years out now in 2020, but that shook a lot of companies and their earnings reports, and many, many missed in 2020. But not Arista Networks. It's got all green. Now, take a look at that price of consensus. Just looking at this chart, you can see where the growth is coming from up and to the right, those lines as the AI trade really picks up steam. And they are in the middle of it. So you got to like this chart. It's very bullish, even though the stock is at new all-time highs on this chart and is up big and continues to rally here in 2025. It's got some pretty nice fundamentals. Now, let's just take a quick look at the actual detailed estimates to see if anybody is raising recently. Okay, so scrolling down, you can see on the estimate revisions part, 2024, four are actually have been cut in the last 60 days for 2024. But who cares about 2024? We've all moved on to 2025. And we have 5 higher in the last 60 days, 1 in the last 30 days. So that's pretty bullish for this current year. On earnings growth, 26% for 2024. That you can see from the price of consensus chart, and 10.3% for 2025. So another nice double digit earnings gain there. And just scrolling down to the sales, also double digits here. 2024 up 18.7, 2025 17.5. So the only question on a stock like this is, what are you willing to pay for those earnings? Right now, the forward PE is at 49.5 with a PEG ratio of 2.9, even though earnings are on the rise. So it's had a big run. It's not cheap. It's expensive, but for now, the street is willing to pay for this high price for these earnings. And just out of curiosity, let's look and see what the price to sales ratio and some of these others are. So it's got a 22 times price to sales ratio. Price to book is at 16, but price to sales starts to get a little frothy once you get over 10 on these tech companies. 10 is kind of like the warning level, and it's at 22. When will the valuation matter? That's the question for all investors. If you're a trader, you're not even asking these questions. You're just trading the stock. But for investors, at some point, the valuation does actually matter, and it reverts back to what I call the mean. It's historical levels. We're not there right now, and these growth rallies can last a lot longer than most people realize. Obviously, Arista Networks has been rallying like this for the last year and 2 years, really. So this is an interesting play. I'm going to keep it on my watch list. I'm going to watch when those earnings come in and what kind of date do we have. This is unconfirmed, but in February 10th for right now, but it'll be somewhere in February, most likely, once that date is actually confirmed. So Arista Networks, interesting play, very hot stock, and we'll see how it all plays out here in 2025. But I am bullish on the AI data center rollout here in the Trump administration. They continue to just within a couple of days announce more investments on the data center in the infrastructure side for AI. So a company like Arista Networks, this is where they're going to benefit. So I do like the companies that are involved in this trade. So ANET is the ticker there. Okay, we're going to switch over to another hot area on the electric vehicle side. And it's not Tesla, it's NIO, ticker NIO, the Chinese smart EV car maker. And I've been taking a close look at this one because I'm kind of staying away from the auto manufacturers right now, but it's an interesting story, right? Because EVs have really taken off in China and this is their home market. So I took a look to see what kind of deliveries it has done. In 2024, it delivered 221,970 cars. That was up 38.7% year over year. So they really found their momentum last year. December deliveries alone were up 72.9% from the year before to 31,138. So I would assume they have some new models that are very attractive and attractively priced that have rolled out in 2024. Now, they're also rolling out this new brand called Firefly in 2025, expected in April 2025 to see this car roll off. And it is the high-end luxury, smaller, smart EV vehicle. So that could be a real driver for NIO here in 2025. So I'm going to be on the lookout for that. What is it looking like on the stats? It's number 3. Zacks ranked number 3 right now. B for value, A for growth, B for momentum. So it has an A overall VGM score. But most of the automakers, even those that aren't on the EV side, are pretty cheap right here. Stocks are out of favor. I'm scrolling down to look at price, consensus, and surprise. We do see earnings growth happening and expected to over the next couple of years, but it is a little bit down and to the right because the analysts maybe were too bullish early there in 2024 and had to lower expectations a bit, even though there is going to be growth there. And we do see on the earnings surprises, so we do have some analysts on the stock that it missed last quarter and then 2 quarters before that. So it's missed 2 out of the last 4, but that's not that unusual with a foreign company that is probably not followed a lot. There's probably not that many analysts on it. Let's look at the detailed estimates to see. Oh, there's more than I thought. We have 5 earnings estimates, but that doesn't always mean the number of analysts, but we have 5 estimates for 2024 and 2025, but we've only got just 1 for the quarters. So a lot of times on foreign companies, the analysts will cover full year, but not quarter to quarter. So they're not doing it as much full time and, sitting in and giving the estimates on each quarter just for the year. So this looks like one of those, but we do have someone doing it for the full year, and the quarters. So that's good. But on the sales side, sales expected to be up 21.8% in 2024 and 48% in 2025. That is great growth. 2024 earnings up 18%, but still losing $1.42. 2025 up 29% and still losing $1.01. We have some changes in the estimates for 2025. We do have one higher in the last 30 days. Maybe that's after they came out with what they were able to sell in, all the auto companies come out with these numbers at the beginning of January. So you're getting some idea on what sales are looking like. It's looking in the backward mirror, but still some analysts might be adjusting what's expected to happen for 2025 based on whatever information they're giving them in these updates about production. So we do see some changes there in the last 30 days for 2025. But like I said, still expected to be up 29%. So I'm liking that. And I'm liking the double-digit growth. It's not profitable yet. So this is another company that, just isn't quite there yet on profitable earnings. And I'm going back over to see just what is the market cap like. 7.5 billion. So that is pretty big and not as big as like a GM or a Toyota or those bigger car companies. But for a China-based company, 7.5, not bad. But you can see I have the price consensus and surprise chart up here again. The stock peaked in 2021, and then it's been down, 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 like a lot of Chinese stocks. Chinese stocks in general just haven't been good, but the autos, these EVs, not good either here. And year to date, it's down again, down 4.1%. 1 year, it's down 31% in the last year. You might think, like, how low can it go? But it's trading under $5 at around 436 when I'm recording this. Its low is at 361. Its high is at 771. If you are looking for a Chinese auto manufacturer, then this one should be on your list, but you might want to consider some of the others that I like a lot more, including Toyota Motors, even General Motors, GM, but this has its own niche and it is growing and selling a lot more cars. So this is NIO, ticker NIO. And we're going to wrap it up with an oldie but goodie. Some of you have been asking me about it though, because this stock has been struggling here in 2025. And it is Apple, ticker AAPL. I just brought it up and I brought up the quote page and you can see it's a Zacks number 4, which is a sell. But remember what I said earlier, that just means that some of the older estimates might have fallen off because it's about to report earnings. Let's see when it's reporting. It's soon, January 30th. After the close is when it's reporting. So that's coming up at the end of the month. And so some old estimates might have fallen off, and that's where you get the sell. But we do know Warren Buffett is actually selling. He's been selling for a while now, and he was one of its biggest champions and a shareholder of over 5% at one point. So what is going on with Apple? Year to date, the shares are down 12.7%. 1 year, they're only up 15 now, but they are holding on to those gains. And so scrolling down, always has had a very good earnings surprise track record. You can see on this price consensus and surprise, just one miss. So it's a little bit, not quite as good as Arista Networks with that one miss, but it was in 2023. They did not miss when COVID broke out. They have beats on those years, but they did finally miss once in 2023. But this is an outstanding earnings surprise track record. And then you can see the earnings there in those squiggly lines up and to the right. It is showing earnings growth. But let's take a look at what that earnings growth is actually looking like in the detailed estimates, because this is the area why Apple is weak. People are really worried now about the kind of growth you're going to get with Apple. Sales expected to be up just 5.5% in fiscal 2025, and we're still in this fiscal year. So it's single digits, mid-single digits. That's not that great for a growth type of company, right? Next fiscal year, 9.3%. So trying to get back up to that double digit, 10% or more area. Hard to do with a company that's bringing in or expected to bring in $451 billion and has, $1 trillion market cap. But they're going to try. And this is what the street wants. They want to see this growth return. Earnings growth still expected to see 10% here in fiscal 2025, 743 versus 675 last year. 2026, another 12.8%. So that's not terrible. I like seeing the double-digit earnings growth, and that's up to 838. What's going on with estimates here? We do have one that has been lowered in the last 60 days, both for this fiscal year and next. That could be why you're getting the Zacks 4 number sell rank as well. But the estimates really aren't doing much for this year. Kind of holding there at 743 for the last 60 days. But that doesn't mean some of the estimates are not dropping off. We have 12 estimates for earnings for this fiscal year and 10 for next year. So some are getting a little old as the earnings now is approaching. Then all the analysts will do their thing, and it's going to be changes up or down, most likely on Apple, and the rank will change then. So stay tuned to see if you're watching the rank, because the rank can change daily and often does during earnings season. Now, what is the issue then with Apple? It's got slower growth, fewer people buying or upgrading, I should say, to the new iPhone models. Subscriptions, okay, that's always been a steady area of growth for them. But the real issue has been, like with Arista Networks, how much are you willing to pay for these earnings? It's still trading with a forward PE of almost 31, even though shares are down double digits for 2025. Price to book is at 61 times now, and the price to sales still pretty elevated at 8.8. So it's not over the dreaded 10 for the price to sales, but it is pretty pricey on a price to sales level when the sales are only expected to grow like mid single digits, around 5% and then 9% for next year. That isn't that great of growth for what you're paying to get it, right? Because that's what it all comes down to. What are you willing to pay for these earnings? What are you willing to pay for these sales? And a true value sales price to sales ratio is under 1, obviously, but we're willing for growth companies to pay more for those sales. And but as you're getting closer to 10 times on the price to sales ratio, that's when it starts to get pretty pricey, even for growth investors. So as I said earlier, most stocks do revert back to the mean. They don't stay at, 100 times PE ratios or sky high price to sales ratios for forever. At some point, they do return to historical valuations, or as you can say. So is that happening now with Apple? It's weak here in 2025, but still up for the last year. What will it take in an earnings report to get people to dive back into the stock en masse? I don't know, but we're about to find out as this earnings report rolls in. So Apple, a lot of things going on with it. It's not cheap here, and it's not really the growth stock either. So it's kind of in no man's land, and that's usually not good for the stock itself when you're in somewhere like that, like the no man's land. So that's Apple, AAPL, and I do not own it in any of my portfolios here at Zacks or in my own personal portfolio. So those are the stocks you all were sending to me along with Nestle. And, I like covering the stocks that you're asking me questions on, because it gets me involved in what's happening with some of these names, because Zacks covers over 4,400 stocks with the Zacks rank. And that's a lot of stocks to keep track of, but we do with the rank, which is a computer-driven algorithm. But you should always be taking a deeper dive into what's going on with these stocks. Even if you're trading it, you might want to know what might be coming on the horizon if you're trading it. And for sure, if you're investing in it, you should be listening in on the conference calls and reading the analyst notes and finding out as much information as you can about a company that you are an owner in. So that is always my recommendation. So let me recap the stock tickers again. You had Red Cat, which is the drone technology company. It's a small cap stock, ticker RCAT. Then we talked about Barrick Gold, the gold miner, ticker GOLD, easy to remember that one. Arista Networks, AI, cloud, and data center side, ticker ANET. A as in Adam, N as in Nancy, ET. Then we had the Chinese EV automaker, NIO, ticker NIO. And then we wrapped it up with Apple, one of the Magnificent Seven stocks, ticker AAPL, a little weak to start the year. Is this a buying opportunity or is more weakness to come? We will watch and see, but I'm sure I'll be discussing it further times on the podcast this year, or maybe on the Value Investor podcast as we move along, but it'll be somewhere. So be sure to subscribe to get us. You can get the audio podcasts on Apple Podcasts. We're on Spotify. We're on Amazon Music. Our video podcasts are on YouTube. I know many of you are subscribing over there, so I recommend subscribing. Get it on Zacks.com/YouTube. Our YouTube channel is Zacks Investment Research. You can also get all of our audio podcasts, including the Value Investor and ETF Spotlight, on our podcast channel on YouTube. That's under Zacks Podcast. Yes, it's a totally separate channel, but that's just audio over there. To get our video podcasts, you need to be on our main channel. But be sure to get us somewhere, and I'll see you again next week with some more stocks.